Hi traders, this is Ken Calhoun from Trade Mastery, and in this episode we're going to take a look at two different charts for swing trading. The first one, and the most important one, is the 90-day daily candlestick chart. And here you can see a really good example of Ford Motor Company, F the ticker. And we're going to look at this chart and also a 2-day chart. But the most important thing to start off with is the fact that, like a musical scale, a really good swing trading chart has a continuous move up day after day that would be really easy to trade and potentially easy to make money with. Where traders get into trouble is they trade choppy charts that don't have consistency, because what you want to do is add to your winning trades. So looking for charts like this makes a lot of sense. Think of it like a simple musical scale that goes up. So like the notes in that scale, you can see Ford Motor Company went up gradually over time. If we take a look at a couple of other charts for other examples, here's IGT, another good one with a good, steady, consistent trend. Again, to avoid is the choppy charts that have big pullbacks or up and down waves because you get stopped out. It's nicer to have charts that have relatively consistent uptrends like these. The other to look at is the 2-day chart. And what I like for that one is looking for emerging breakouts. This is 2 days of price action. And a good example for a 2-day chart breakout pattern is found in Pfizer, where it had a steady uptrend and then a gap on good news, and then the new breakout above the high makes sense. So gap continuations are one thing to look at visually on the 2-day candlestick chart as well. So the two types of charts to not trade are either choppy sideways charts or charts that have major pullbacks, and the other is an example like this one, LCID. While this is great for day trading, it's far too risky for swing trading because the range is too big. You can see just a few days ago it was $30 a share, now it's $42 a share. Oftentimes you may be on the wrong side of it and buy say at 42 and then it gaps back down to 35 and you lose a lot of money. So avoid swing trading charts that are either choppy and are not clean and tight, like Ford was a nice clean tight chart, and also avoid charts like this where it's got too much of a range, where the range is many points and all it takes is one bad overnight gap against you to cost you a lot of money. So while great for day trading, charts that are good for day trading do not necessarily make for good charts for swing trading if the volatility is too large. So make sure that you're looking for charts that have a nice, well-mannered, I won't use the word safe, but a relatively conservative, clean breakout without too much range or without too much chop that are relatively consistent. So when swing trading charts, you want to avoid charts that have notes all over the place or price action patterns that are too extreme. Though it may sound fine on the horn for jazz, they're not the ones you want to trade for safe, conservative swing trades. And that'll do it for this episode. See you next time. Trade safe, trade smart, and best wishes for success in your trades. For more, be sure to visit my site at trademastery.com and try out my live trading room. We've trained thousands of traders over the last 20 years and hope to join you in our live room as well. So see you there. Trade smart. Bye for now.